Welcome to Exchange Rates UK TV. It is the 2nd of August 2021, first trading day of the month and the week. Hope you all had a great weekend. And I hope that the air has been fine where you breathe, unless you live somewhere in the States or Canada and you've had the wildfire smoke coming across and it's just all over the place. Looking at Cardano here. So, I mean, it's hard to take a step back sometimes. Well, actually, it's not hard to take a step back. It's easy to get caught up in the day to day, and sometimes it's easy to, kind of forget where you were at a week ago or 2 weeks ago. And so, if we take a look here at the open of the candle on the 21st of July. We've traded up as much as 32% from that level, where we're currently up 24%, which is pretty nice. So we're up 26 cents or 24.9%, 25%. That's a pretty good rise. And, when you look at this, we've just been kind of, it's not technically really a tight range, but it feels like it because the movement up has been very, very, very constricted. It's just the open and the closes of the days are really, really tight. And when you look at the body of the candlesticks here, I mean, this is this is a really tight range. Ignore the wicks, just look at the body. So I mean, look at today's, and the open is at 131.5. It's currently at 131.6. Yesterday's open was at 131.9, and the close was at 131.4. And then Saturday's was 131.1 and closed at 131.9. So, using the bodies of the candlesticks, this is the second inside bar. When we're looking at it on a weekly chart, we have an inside bar at the present. So there's a lot of stuff going on. One thing I do want to point out here, and let me just pull that chart up. So back on TradingView here, and actually let me get rid of the volume profile. So this is the monthly chart for Cardano. And let me kind of make this a little bigger so we can see what's happening. All right. So last month in July, we formed an inside bar, meaning that the entire trading range of that month traded inside the range of the prior bar, which was in June. So in other words, July's low was higher than the June low, and July's high was lower than the June high rather. And then June was also an inside bar because June's high was below May's high, and June's low was above May's low. Sometimes it's hard to say that all out loud. It gets confusing. So this created what's known as a squeeze alert. And a squeeze alert is a candlestick pattern identified by Michael Tomset. And I wrote about this in Friday's analysis a little bit. But a squeeze alert is a very strong bearish sign. And that it's an overwhelmingly bearish pattern. Now, when you look at the pattern also that exists here, you have really a kind of a diamond shape pattern. When you're looking at the monthly or the weekly, you definitely see this kind of diamond shape going on. And this by itself is powerful too, because a diamond pattern is rare. This is called a diamond top. And in Thomas Bulkowski's book, the Encyclopedia of Chart Patterns, second edition, I have it right here. It is quite bulky. I think it's about 1,000 pages long. All the pages, including the index, is about 1,000 pages long. And this is one of the most overwhelmingly bearish patterns that exist. And it breaks down most of the time to the south. But he does mention that a failed breakout south, instead if it moves higher, it's even more of a dramatic move. So there could be this, in other words, there could be this insane move higher on the monthly chart moving forward. Now, when I look at the oscillators and I look at these levels in the composite index, the RSI, and the %B, Now, the percent B is pretty flat. Okay. I mean, it's sitting at 0.42. Really, I mean, nothing big going on here. It did bounce up, but it's holding pretty well. The composite index, all right, it's been trading. It came down to in July. Sorry, we'll go to the monthly chart here. Sorry, I meant to stay on the weekly. In July, it found, a historical support level, and it bounced up, and it's crossed above the fast moving average. And the RSI is trading pretty flat here. It's sitting on 50. That is the first. I don't have the line on here, but 50 is the first oversold level in a bull market. When you look at the monthly, though, it's a little different. All right. I mean, the RSI is still up in the 70 territory, which is fine because in a bull market, the overbought levels are 80 and 90. So that's perfectly fine. But what you do see happening here is this, okay? You have this kind of move here where it's getting close. And I mean, in fact, you could really use this little dip here in the composite index. This low here, it doesn't look like a low, but it is nonetheless a point on the line that is important. Let me just put a ray there. So that's the level I'm talking about, okay? That level is important. Now, look at the corresponding candlestick. It's up here. And then look at the low of the current monthly where this is at related to the current candle. All right? The candlestick here is higher than the candlestick back here, okay? Whereas the point in the composite index on the monthly chart here and then to where we are now is lower. That is known as hidden bullish divergence, okay? And that is something we're going to pay special attention to because this was looking very much like a bearish move would continue south. Now it looks like you could see a continuation north because of this hidden bullish divergence, all right? So this is something we're going to watch and monitor, pay attention to as we move forward into the month. We'll leave it there for now. It's already almost 8 minutes long, and I'll get back to you guys. Thank you for watching. From all the shared Exchange Rates UK TV, please don't forget to like and subscribe.